Let's talk about the recent G7 summit, because honestly, it was a complete mess. If you're still under the impression that all Western countries are united, it's really time to update your assumptions. Just watch the interaction between Macron and Meloni. The whispering, the expressions. Her face alone said 1,000 words. Sure, that might be speculative, but let's look at what actually came out of the summit. Nothing. No concrete results, no decisive agreements. Even US allies are now asking, is Trump really with us? Or is he just pushing his own agenda? This summit laid bare the reality of today's geopolitics. The economic war, the trade war, it's not slowing down. And Trump scrambling back to Washington? That's just the cherry on top. Did you catch that moment when Trump dropped the US-UK trade deal on the floor and Prime Minister Starmer bent down to pick it up? Analysts zoomed in on the term sheet and found it was literally a blank piece of paper. That's the perfect metaphor for the entire summit. All show, no substance. But it's no joke. This nothing burger actually highlights how dangerous the current trajectory is. We're creeping toward economic collapse levels unless something drastically changes. And unless Trump distracts everyone again with something like another Taco Tuesday. Meanwhile, many of America's allies are watching their economies teeter on the edge. The EU is one, but Japan is in particularly dire straits. Its export-based economy is barely hanging on, and they came to this summit hoping for a deal. Instead, they leave empty-handed. That means auto tariffs and steel import taxes are likely to hit them hard. Japan is now staring down a triple crisis. First, there's the tariff wall, 24 to 25%, especially on auto exports to the US. Second, Japan is facing the highest inflation of all G7 nations. And third, a mounting debt crisis is limiting their ability to raise interest rates. They're truly stuck. Their only option has been to risk a debt implosion in an attempt to fight inflation. Currently, core CPI is at 3.5%, but interest rates are only at 0.5%. The Bank of Japan plans to continue its bond tapering, selling more bonds to raise rates. But this takes time, and it's risky. Higher interest rates in Japan might attract capital inflows into yen assets like government bonds, which would strengthen the yen. That sounds good until you realize it would further hurt Japan's exports, making them even less competitive, especially against China, whose weakening yuan is making Chinese goods cheaper abroad. That's exactly why the G7 summit mattered so much for Japan. They needed a breakthrough. Instead, everything's in limbo. And with the tariff pause set to expire on July 8th, that limbo could turn into disaster. G7 economies, especially the biggest ones, are on the brink of a major export collapse. If you think US consumer demand is weak now, just wait until tariffs double. And let's not forget Trump's own words, where he effectively outlined his entire strategy. We're going to send a letter saying this is what you're going to pay. Otherwise, don't do business with us. That's not negotiation. That's a global ultimatum. Trump is laser-focused on closing the US trade deficit. That's just as important to him as isolating China. And countries like South Korea, Canada, and India, they're all left out in the cold, with no deals on the table. Back in Washington, Trump is now heading into a Security Council meeting, and there's a real sense that something major could happen. Who knows, by the time this airs, we could be on the edge of a full-blown economic or even geopolitical crisis. Right now, the biggest consumer market in the world, the US, is about to get hammered by tariffs. And that's a disaster for G7 exporters who rely on American demand. According to Apollo, if we return to Liberation Day tariff levels, the US would see average effective tariff rates of 22%. That means a 22% price hike for most goods, a 1.5% increase in inflation, and a 1.5% cut to GDP growth. This isn't just bad for the US, it's catastrophic for everyone. The only way G7 countries can protect their own revenues is by shielding the US consumer from Trump's policies. It's a strange thought, but that's how desperate things have gotten. The crisis isn't just American anymore. The global economy is on the line. Export-heavy economies are in serious trouble, especially those dependent on the US. The IMF is already projecting a 0.4% hit to growth for advanced economies. The US will be hardest hit, but Europe and Japan won't be far behind. Selling to the rest of the world is also no easy fix. G7 exporters are getting squeezed from both sides. On one hand, China is allowing its currency to weaken, making Chinese exports cheaper and tougher to compete with. On the other hand, developing markets aren't exactly booming right now either, so demand is drying up across the board. And then there's the second half of Trump's G7 visit, just as shocking. He flat out refused to support sanctions on Russia. Maybe not surprising to you and me, but it certainly blindsided the rest of the G7. He even blamed the G8 leaders for kicking Russia out of the group in the first place. The recent developments around the G7 have been nothing short of a hammer blow. The group's identity is built around resisting Russian influence, so when Trump openly endorsed Russia to the West, It sent shockwaves through the alliance. What's even more startling is that Trump doesn't seem interested in strengthening sanctions against Russia. While avoiding escalation might be a reasonable move on its own, his rationale strikes at the heart of the G7's unity. He essentially told Europe to go ahead with sanctions without the US, pointing out, not incorrectly, that these measures would cost America significantly. But to Europe, it feels like Trump is trying to do a Burger King. Have it his way, ignoring the concept of coordinated action. Incredibly, he's managed to anger US adversaries and alienate its allies almost simultaneously. It's taken him just a couple of months to do it, and the price is steep, sacrificing the stability of the American economy. The situation becomes even more bizarre when we step back. On one hand, Trump wants the G7 to isolate China. On the other, he's demanding they submit to US tariffs, hardly a recipe for building a strong coalition. Sun Tzu would not be impressed. As a result, cracks are showing in US industries. The Fed's June manufacturing index plunged to 16, a massive miss from the expected 5.9% and far worse than the previous reading. The administration's plan to stimulate industrial growth through tariffs just isn't working. It's overly simplistic to assume that cutting off cheap imports will push consumers toward domestic goods. In reality, people just stop spending. They don't automatically switch to more expensive alternatives, they simply opt out. Meanwhile, the G7 summit featured another major subplot: Europe's renewed hardline stance on China. Whether it's a bid to stay relevant, pander to Washington, or just appear tough, the bloc has agreed on a new strategy to protect its critical mineral supplies. But so far, it's all talk. There's no concrete action plan. That's especially concerning when you consider that China controls nearly 70% of production and nearly 100% of refining in this sector. So what exactly is Europe going to do? This task won't be easy and is likely to fail. China has a massive lead when it comes to rare earths and global supply chains. Part of that advantage is time. Beijing has spent decades building its supplier networks and building in redundancies. But more importantly, China is actively projecting its financial power across the globe. It's the largest lender to the developing world, which is why the US often criticizes Chinese loans as debt traps. But let's be honest, it's not about protecting poor countries from financial ruin. It's about curbing Beijing's economic influence in strategic regions. When China lends to developing nations, economic ties naturally strengthen. The G7 could do the same, but they don't. No one is stopping the US or Europe from stepping up as global lenders. Take cobalt, for example, a critical mineral for electric vehicles and chips. By 2030, Chinese firms are projected to control 46% of the global supply, not by sourcing it domestically, but by investing in developing countries. Most of this comes from places like Indonesia, Papua New Guinea, and most significantly, the Democratic Republic of Congo. China is pouring $7 billion into the DRC over the next decade. That's how it builds dominance, by putting real money into real investments. The G7, if it's serious about countering this, will need to match that with long-term investment and patience. It won't be cheap, it won't be quick, and tariffs won't be enough. You simply can't sanction a country that provides 80 to 90% of what you need. It's not feasible. China's scale as a lender is enormous. In 2021 alone, it loaned nearly $1 trillion, and even with a decline, 2023 still saw lending exceed $800 billion. Compare that to Western institutions like the IMF, World Bank, or Paris Club. China's financial influence is now on par with or greater than all of them combined. After 2 decades of strategic investment, it's no surprise that China dominates global supply chains. And China has another card to play. Thanks to its massive export economy, it offers currency swap agreements that provide crucial liquidity. If a country lacks US dollars but needs to buy Chinese goods, they can use renminbi instead. For instance, Turkey recently renewed its swap line with China's central bank, giving it access to up to 35 billion RMB. This acts like an economic lifeline, especially in the face of trade disruptions or dollar shortages. It allows countries to maintain currency strength without relying solely on the US financial system. So, if the West truly wants to contain China's rise, it has to act on all fronts: trade, finance, infrastructure, diplomacy. But is that even possible anymore? From what we've seen at the G7 summit, the alliance is deeply fractured. Each member seems to have its own agenda. The US is focused on a tariff war with China, but is reluctant to sanction Russia. Europe wants to go after both Russia and China, but lacks the means. That's the current state of affairs. A disjointed, reactive alliance that's struggling to stay relevant. So what do you think? Are we witnessing the functional end of the G7? And why is Europe suddenly so obsessed with confronting China? Let me know your thoughts in the comments. Stay safe, and if you found this analysis helpful, be sure to like and subscribe as we navigate through these chaotic times.